Hi guys, welcome back. 27th of April today, and we're going back to check up on our bearish position on the euro versus the Japanese yen. Now, this is a classic case study, I gotta tell you, because it shows you the sheer power of this symmetric system. Now, let's go back probably around 10 days ago, when we first entered this bearish position. Now, in terms of the technical picture at that time, it looked pretty promising on the downside because price basically reached the upper part of the setup, right? We're talking about the black setup. It took the previous high. We didn't actually enter at that point yet. We actually saw price given another upside thrust and taking yet again the previous high, right? At that point, I felt quite confident on the downside reversal, so we enter roughly at around this point just to see price continues to flirt with that 200-day moving average and find it to be a stiff support, right? Take a look at the reaction we had here on the bottom, and I'm talking about day after the other, right? Just consecutive days. Keep spiking that 200-day moving average. I also mentioned at that time that I'm very well prepared for another upside move straight to that last line of defense, 133.15. And it was no surprise to see that actually happening once price found that 200-day moving average as unbreakable. So it went straight to that line, right? And take a look at this wonderful reaction we had here. And this is why I'm saying this is the sheer power you have in your hands once you're looking at the symmetric setup and you can actually dance with price action. So price went straight to that line, touched base on 3 consecutive days, but you can see was unable to break through just as I expected. And this is why I placed my initial stop loss level so loosely at 134, because I was expecting these types of spikes right on that level. And there you go, right? A complete turnaround, and guess who's standing in the way? Yet again, that's the 200-day moving average. But I tell you what, on this time, on this occasion, I think we're going to have a breakthrough. I believe this is probably going to be the 5th attempt. But this one is looking really good, right? Looking really promising. I think we're going to have a break probably as soon as today. And price is basically just trapped between the 133.15 from above and right now the 200-day moving average from below. And you can see it was a formidable support up until today. So we'll see how it goes. But let me tell you this: our first target, which is this is just the next natural symmetrics level, 131.70, right? So at that point I plan to take some profit out, and then of course we aim at the other side, at the lower part of the setup, and that is the main key level you want to keep in mind, 130.07, right? 130.07. That leaves us more than 200 pip. That's not a big move, in terms of swing trading, position trading, which is what we usually do. That's not a big move, but still, it's nothing to take lightly. And the setup, right? The setup is very strong, so we gotta give respect to that fact. And stop loss level, I have to still keep it in place, 134. At least until we're breaking that 200-day moving average or hitting that 131.70 here. Only then I will start to adjust the stop loss level significantly. So we'll see how it goes. In the meantime, I will say goodbye and we'll see you in the next video.